Well, hi everyone, and welcome to the Buffett and Beyond Research Stock of the Week. And today we're going over BJ's Wholesale Club, and it's up 300% in 5 years, and it's a recession-resistant stock. And this is for January 11th, 2025, so we have all new numbers on it. So remember, folks, if you want to walk on this beach like Jimmy Buffett used to, you've got to learn how to invest even better than Warren Buffett does right now. And this week, well, BJ's Wholesale Club operates warehouse-style membership stores on the East Coast of the United States. So it's smaller than Costco, especially in this respect. Now, as of March 2024, the company had 243 club locations and 174 gas stations in 20 states. Now, the largest concentration is in New York and Florida. And down here, boy, oh boy, it has 7+ million paid club members. That's up 1 million in the past 2 years or so. Now, BJ's purchases its merchandise directly from manufacturers, and it had 34,000 employees. So it's a nice little company, folks, and I wouldn't call 34,000 employees a little company. So it's doing real well, but let's take a look. First of all, let's look at the clean surplus return on equity. And when we talk about our growth portfolio, we want to see stocks that have ROEs around 20% or better. The average stock in our entire database has an average clean surplus ROE of 13.5%. So according to the theory and all the research that we've done over 20 some years now, when we have a clean surplus ROE better than the average stock, usually that stock outperforms the S&P 500. And remember, over any 10-year period, any 10-year rolling period, according to Morningstar, they're telling us that 96% of professional money managers, and those are the people who we can track daily because they run the publicly traded mutual funds, 96% of them cannot outperform the S&P 500 over any 10-year period. And folks, we do that very handily. Now, I just want to show you something over here. Net income, so getting back to BJ's Wholesale, is that this number has been reduced a little bit from $4.55 down to $4.20. That dropped the clean surplus ROE down to 19%. We'd really like to see it at 20%, like down in here. Now, the retention rate's 100%. That means it's taken all the money it makes and puts it back into itself in order to grow. And how do we know it's doing that efficiently? Because it has a higher than average clean surplus return on equity. Now, net income growth for 2025 and revenue growth are below the averages out there, and that has us a little bit worried. But folks, the market does not worry about that. It has very, very little debt, and of course it's a retail store, so it's in the retail industry, and it's one of the, not too many retail stores are doing well out there. BJ's is, Costco is. In fact, let's take a look. When we look at the clean surplus ROE of Costco, we can see that it's in the high teens, but it's above that 13.5%. We do have Costco in our growth portfolio right now. And we look at BJ and compare the clean surplus return on equity. It has a higher clean surplus return on equity than Costco. So we would think that BJ's should outperform Costco. And wow, has Costco done very well for us over the years. So let's look at the last 12 months. And over the last 12 months, with the black line, the S&P 500 down here, the blue line Costco, and the yellowish line BJ's, we can see they are tied neck and neck right here at the end, both up 40% over the past 12 months, while the market's up about 23% for 2024. And over the past 12 months, so that includes the first couple of days of January of 2025, which is right here, we see we're up about 24%. So we can see that Costco and BJ's are doing very, very well because those are two of the retail stores that people are going to. Why? Because they have better prices. Now, let's look at the past 5 years. Again, black line is the S&P 500, blue line is Costco, and this yellow line is BJ's. And let's go back here for a second. We would expect BJ's to outperform Costco over the long term because BJ's has a higher clean surplus ROE. And that goes along with our theory that we've been using for over 22 years now with our portfolios, is that the stocks with the higher clean surplus ROEs outperform the stocks with lower clean surplus ROEs. In other words, if you take any index, any ETF, any mutual fund, and you can pick the above average stocks and the below average stocks, you'll see the above average stocks have higher clean surplus ROEs. So that's how we tell. We know how to figure out the clean surplus ROEs. It's in our book. It's in a doctoral dissertation that was done about 22 years ago. And there's 2 books out on it. Very, very good system, folks. It works very, very nice. And we're back here to the past 5 years. Now, right in here, and this is what I want to show you about recession resistance. We see the S&P fell 19.6%, the black line. The Nasdaq 100 and the Nasdaq index itself fell 34% during this time. Now we can see that Costco fell, but it didn't fall by very much at all. So Costco was up, was down during 2022. But look at BJ's, and now you're going to see why we like BJ's. Number one, it outperforms. And number two, during the rather dismal year of 2022, while the market was down in every aspect, this stock was actually up. So that's what we like about BJ's. Not only does it outperform the averages along with Costco, but BJ's is a better recession-resistant stock, or at least it has been in the past. So that's why we like BJ's, and yeah, that's why it's in our growth portfolio along with Costco. We like those 2 stocks in our portfolio. So folks, that's it on BJ's. We like it. It's in our portfolio, but here's the weekend, so go out and enjoy yourself. Even if it's cold, put on warm clothes and go for a nice brisk walk. And if you're down in Florida, where this picture was taken, then just go to the beach and enjoy this beautiful sunrise. Usually you get this kind of sky at sunset, but this is a sunrise right here. So remember, if you want to walk on this beach like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now. So folks, go out, be with your family, be with your loved ones, and we'll see you back here in a couple of days.